Good afternoon, everybody. This is Bonnie Vandermeulen, Training Coordinator for Wisconsin Facets. On behalf of our entire Wisconsin Facets staff, I'd like to thank you for joining us today. Today, our webinar is entitled ABLE Savings Accounts and Financial Planning for Families of Individuals with Special Needs. Our presenter today is Kathleen Obernetter. Kathleen has a passion for empowering individuals to understand and take control of their financial futures. As a financial advisor at Crescendo Wealth Management, Kathleen brings more than 18 years of experience in the financial services industry. Kathleen started her career as a speech and language pathologist working in a hospital in North Carolina after she graduated from graduate school. She found that evaluating and treating individuals who suffered from neurological disorders or injuries actually correlated well with the financial services industry. And this is a quote for you: "Money and health are two things that are very important to individuals, and both can be confusing and intimidating enough where people are not making the decisions and taking the actions that they need to protect themselves." End quote. Kathleen has 3 daughters. The youngest, Emily, was born in 2010 with Down syndromes. It was this life event that helped her to realize the financial industry was not properly serving families like hers. Kathleen has focused her practice on working with families who have loved ones with special needs. This has allowed her to use her years of experience of providing financial education to assist families who are like her own, to help them plan for their future and that of their special needs loved ones. She is a frequent speaker and writer on topics related to special needs financial planning, including the new 529 ABLE savings accounts. It is my sincere pleasure today to introduce to you Kathleen Obernetter. Kathleen?
Thank you so much, Bonnie. What a wonderful introduction. It's always good to hear maybe some of my accomplishments. I don't really look back and think about where I have come from, just kind of focusing on where I'm at today and things I want to do in the future. So today I'm going to continue to share what I want to do in the future, and that is continuing to empower and educate families to be able to make those decisions regarding planning for really 2 generations, right? As Bonnie mentioned, I am in your shoes if you're attending this and have a loved one with special needs. It's the thought that when my husband and I are gone, I need to make sure that my daughter is taken care of financially. So today we're going to talk about what the importance of special needs planning is. We're going to dig deep into the specifics of the 529 ABLE accounts, who's eligible, understanding enrollment, and then I'm going to be able to compare and contrast how a special needs trust works in collaboration with an ABLE account and help maybe dispel what I say are some of the myths where people feel like one replaces the other, and that not being the truth, but how both work in conjunction for a comprehensive special needs plan. What is special needs planning? And people kind of say, well, what do you really do for your clients? And I'm helping parents, families, and caregivers manage the assets and resources which will be there to provide and protect your loved one with special needs now and when you can no longer provide for them. And maybe really I'm saying that no longer provide for them being when you're no longer alive. However, no longer provide for them may happen during your lifetime. And that's the whole planning for 2 generations, right? When I do have 3 children, 2 are neurotypical and 1 being neurodiverse, Emily with Down syndrome. The ideal situation when you're raising neurotypical children is that they grow up, they maybe go to trade school, maybe go to college, start a job, but they eventually leave the household and get off your payroll. Well, our children with special needs may get off the payroll to an extent, but they're never truly able to financially support themselves. And that's why you're planning for 2 generations. And I work with families to create a full comprehensive financial plan. I'm not focused on selling a product. I'm not just doing investments. I'm looking at all aspects of your financial scenario. And then I love attorneys. I send a lot of business to attorneys. And I love clients who come to me and say, I've got a special needs trust. And I say, that's wonderful, but that's not all you need to do for special needs planning. You're really only 50% of the way there. And I help people understand, how do you fund that trust? More specifically, the questions I can help my clients answer is, have you set up that estate plan? Do you understand what your estate will do to fund the trust that you have set up or maybe have not set up? What is the vehicle for funding that trust? Life insurance being a big vehicle to do that. Do you have life insurance? What type do you have? Going even as far as, what about your trustee for your special needs trust? Are you communicating all of those legal documents to professionals? And then really the last bullet point is, as a parent, how are you taking care of yourself first? And we know as parents, it's very common to put our children with neurodiverse needs first and making sure they're taken care of, but it's the whole oxygen mask metaphor where you've got to put it on yourself first to make sure that you are taking care of yourself to be a quality caregiver. The ABLE Act, I can't believe we're in 2020 and that 4 years ago, it was 4 years ago when the first programs launched in the summer, but it just seems like those 4 years have gone by very quickly. ABLE Act is a law. It was signed into law by President Obama in December of 2014 at the federal level. Governor Walker from a state level in 2015 signed it into Wisconsin state law. And then it was approved in Wisconsin at the federal tax bill approved in December of 2015 that allowed individuals to open ABLE accounts in any state regardless of where you reside. So first off, Wisconsin is one of the states that does not offer a state program. However, that does not mean you cannot utilize one of the 42 state programs that are offered. And as I shared, the state programs first launched in 2016. One thing to note, even though Wisconsin does not have one, kind of the trade-off per se of the legislators who worked on the ABLE law is they said, okay, Wisconsin's not going to spend the funds to create their own. Therefore, we want to provide an incentive for Wisconsin residents to still open an ABLE account, and therefore their contributions, the unlimited contributions, will be able to be tax deductible. And I'll talk about that a little bit more as the presentation goes on. And I know, Bonnie, I can't recall if you mentioned, but feel free to write down any questions you might have, and then we'll talk about those at the end. I do know that questions will come up, and it's possible I'm going to cover that information in future slides. Now, why is the ABLE Act so significant? As parents, you may or may not know this. I'm not sure who's on this webinar and what is the age of your child, of if they have a disability or not, and what their age may be. But this act is the first one to really recognize the extra and significant costs of living for an individual with disabilities. If you have experience and are on SSI or SSDI, you understand there are limitations from a resource perspective. Actually, Medicaid and SSI, not SSDI, but that involves our children not being able to have more than $2,000 in their account. I always like to give the example of Emily. My daughter, Emily, with Down syndrome, is 8 years old. So she's right now not on SSI, but when she turns 18, she can't have more than $2,000 to be able to get that SSI. These accounts do not count as an asset, okay, for the means tested resources, which are SSI and Medicaid. We've kind of established why they're so important and what makes them unique. Now, eligibility, what is the eligibility for an individual to qualify for an ABLE account? There's really two things: the age requirement. So one of the limitations in the legislation was they had to limit the age. So the disability needs to occur before the age of 26. And the severity of disability would either be determined by the Social Security Administration's disability requirements, or a disability certification could be submitted by a physician, which would confirm the functional disability criteria. So there's an age requirement, and then there is a level of disability requirement. There's legislation right now where they're looking to try to increase that age to age 46. However, it has not gone through. We said that there's a savings account, so an ABLE account is a savings account. What makes an ABLE account different than maybe a traditional savings account? So maybe some of you on the phone have been setting aside assets into an account that's maybe owned by mom or by dad, thinking, okay, this is kind of our rainy day fund for our child. Well, we know that, you can't technically do that because that's considered a resource, but it has happened in the past. And the traditional savings account, that doesn't allow any tax advantage to it. And what I mean by that is when you make contributions into an ABLE account, and we'll get into specifics of the parents. So I make contributions into my daughter's ABLE account. Other individuals can make contributions to her ABLE account, but those contributions are made with after-tax dollars. When those contributions go in and over time, as the balance increases, the earnings grow tax deferred or tax free. And then when you take distributions or take money out of the ABLE account, those distributions are tax free as long as they're paid or utilizing or are utilized for qualified disability expenses. So there's a significant tax benefit. And if we go back to kind of the beginning, the ABLE accounts were named after an individual named Stephen Beck. He was one of the parents who came up with this idea, and it was this kitchen table conversation. He had 2 children, one with special needs, one without, and he knew that for my child without a special need, I can save in this thing called a 529 for her future college expenses, and I get a tax benefit to have that balance grow, and when the money comes out, I'm able to get that out tax-free. Why can't I do the same for my child who has a disability? And therefore, that's where the importance of the tax advantage account came from. Now, there's from a state level, the third bullet point, a Wisconsin subtraction from your federal adjusted gross income is allowed for Wisconsin residents' ABLE account contributions. I know that's a mouthful, but just know that if you are contributing to an ABLE account, and this is tax time where you're getting tax documents ready, make sure that you're giving the statement to if you use a CPA or an accountant, that you're letting them know that you're making those contributions, because there is a tax benefit. It's really from the federal AGI, even though it's a state level. Now, how do ABLE account assets impact eligibility for federal benefits? ABLE assets will be disregarded or receive favorable treatment when determining eligibility for the means tested benefits, and those being SSI, supplemental security income, which an individual, once they turn 18, is eligible for, or possibly eligible before 18, depending on the income of parents. SSI payments will be suspended if it goes over a certain dollar limit. So I like to kind of skip to this slide to show you a visual of contributions amounts and then when SSI will be impacted. The annual contribution limit, so how much can be contributed to an ABLE account on an annual basis. It's $15,000, which is a dollar amount that's tied to the annual gift tax limit. So it has gone up. It did not go up from 2018 or 2019. And then what I wanted to say is for $15,000, unlike if you have any experience of contributing to traditional 529 plans, 3 or 4 different parents can contribute $15,000. In the ABLE account, for Emily, the example of Emily, she can only have one ABLE account and 12 people can contribute, but that aggregate amount cannot exceed $15,000. That can be somewhat confusing. So the first is the annual contribution limit. And then the second limit is the fact that the balance within the ABLE account cannot exceed $100,000. If it does, both the principal and the earnings, meaning the money you've put in and the money that has maybe grown because of investment performance, once it exceeds that $100,000, that's when SSI would be suspended. Now, anybody who is not on SSI, there's an aggregate contribution limit. So each state has their own, and this may be even a little bit outdated. I think Wisconsin's aggregate contribution limit exceeds $500,000. Probably not a concern for many of us, definitely not for me. I had mentioned this before, each individual may only have one account, right? So Emily can only have one ABLE account. Her 2 sisters have multiple 529 college savings account, but not possible in an ABLE account. I set up Emily's ABLE account, An ABLE account can be created by the designated beneficiary or their authorized legal representative. So if you're a parent on this call and you have durable power of attorney or you're their legal guardian, you can set it up for them. If they're of the age of majority and you don't have any authorized legal representative for your child or your adult child, then they would be the ones actually setting it up themselves. And when we talk about some logistics, all of the state programs have online enrollment, and therefore it's really meant to be kind of do it yourself, enroll on your own. They're meant to be easy. They have 1-800 numbers, but it is really a process to enroll electronically. Okay, I will get into deeper about, even though they're called savings plans, it's somewhat of a misnomer because you do have the ability to invest your contributions within these accounts. So it's not just a savings plan. I'm going to go back because I skipped a slide. I skipped the slide regarding Medicaid, right? So we talked about SSI and the fact that SSI has a dollar limit before it would be suspended. Medicaid's different, okay? And these accounts are Medicaid payback, meaning the money that I have in Emily's ABLE account, from the time she was born, she's been getting Medicaid. Will most likely get Medicaid through her whole lifetime as long as Medicaid is available to her. But the ABLE account, from the time I opened her ABLE account, is when the assets within that ABLE account become subject to a state recovery. Okay, this is something I hear often. Well, ABLE accounts are bad because if my child dies, the state gets the money. And I will tell you that there are more advantages to the ABLE accounts than there are disadvantages. Of course, if you have a child who's medically compromised and you know that doesn't have a long lifespan or have health concerns, then the probability of in the next few years them passing away, maybe you don't want to put those funds in the ABLE account because you won't have the time to utilize them. But what the Medicaid payback means is that when Emily dies, Medicaid is kind of the first creditor. But it's not from the day she was born that the tally of what she owes Medicaid. It's from the time that the ABLE account was created, if that helps you understand that. And the ABLE accounts are similar to what's called a first party or a self-settled special needs trust. So that's similar concepts to the first party trust. Now, what can the ABLE funds be used for? There's this term of qualified disability expenses. Anything related to the beneficiary's blindness or disability that would be for the benefit to help them maintain or improve health, independence, or quality of life. The accounts were created with the thought that we want to be the opposite of the strict rules for Medicaid, meaning we don't want there to have to be a quote unquote medical necessity, and we don't want it so strict that it wouldn't potentially benefit others. For example, travel. If Emily's never going to go on a plane by herself, well, I can't say that, I don't know, but there's just qualified disability expenses have a broader definition. And what that means is when you take money out of the account to make that distribution tax-free, it has to be used for one of these qualified disability expenses. For example, any type of vocational support that maybe is not covered from public benefits. If there's job training, maybe it's a different level of transportation for a job. I can tell you that if your child has maybe a heart defect, I think you can justify toothpaste because dental hygiene is so important and that's related to the individual's health. Prepaying funeral, just to tout my services, financial advisors can be paid through an ABLE account. Attorney fees can be paid through an ABLE account. Now, what if money comes out of the ABLE account and it's not considered for a qualified disability expense? Well, that just means there's going to be tax consequences similar to anybody who has an IRA or a 401k and you're taking money out early. You're just going to have tax consequences. They're not huge, but ideally you're going to want to be utilizing this for qualified disability expenses. Like an example, I've got Emily going to summer camp this summer and it's not all covered through her waiver services. So the additional money for summer camp, I can pull money from her ABLE account and utilize that for summer camp. Not to get too deep into the complexity, but a special feature about the ABLE accounts to utilize in coordination with a special needs trust is the ability to pay for housing. Now, if you have an adult child who has a trust that's been funded, meaning there's money in the trust, and distributions are being made from the trust. So maybe grandma passed away, $100,000 was given years ago before ABLE accounts were set up, and it's in a supplemental special needs trust for the benefit of Emily. We'll say grandma died and Emily's utilizing that, but she's living in an apartment and paying rent. If the trust was making distributions to pay that rent, then her SSI would be impacted, meaning she would get less monthly from SSI because that trust, even though it's a supplemental special needs trust, it's considered a resource available to Emily. Well, how do you avoid that? Because we know reducing SSI anymore is even more negative. So therefore, how do we avoid doing that? Well, you can have distributions from the trust still happening, but they can go to an ABLE account first, and then distributions from the ABLE account pay that rent. And as long as that's happening during the month of the distribution and then the rent being paid, SSI doesn't consider that as a resource. So just something to be thinking about of how there's value in using, if you have a trust that's funded and distributions are being made, and if they're on SSI and you're having issues with that, an ABLE account can come into place there. People ask, well, who's gonna know what I'm doing with the ABLE account? How do we know that they're qualified distributions? So the individual, or in Emily's situation, it's my responsibility that I'm prepared to substantiate any of the withdrawals from her ABLE account. So if there's questions from Social Security, from the state, or from the IRS, that's really my job to keep track of that. Most of the state programs have a really good tool for record keeping, just kind of like your bank statements, where you can see who the vendor was and a way to be keeping track of that. In 2018, this is when there was a change into some features of the ABLE account. One was an increase in the maximum contribution. So you can see in 2017, it was 14,000, and 18, it went to 15, stayed 15 in 19, and is staying 15 in 2020. The ABLE Financial Planning Act. Now this is something that is a positive. Maybe your child has a traditional 529 college savings plan that was set up before they were diagnosed with a disability, or you had an idea of kind of what their future may hold for abilities. Now a traditional 529 can be rolled into an ABLE account. There's still limitations. If it's like, I have a client who has a $100,000 traditional 529 account, we're only able to put $15,000. So we're kind of rolling each year. We maxed out 2019, put $15,000 in. 2020, we put 15, and we'll keep doing that to get it out of the traditional college savings plan. The last piece I wanted to mention, and this was an example with this particular client, their son was employed, so he had earned income, and he was earning about $10,000 a year. So not only were we able to maximize the $15,000 contribution because he had earned income in 2019, we were able to contribute an additional $10,000. So if your adult child has earned income, that's a way to exceed the $15,000 in contribution. So for example, maybe you as a parent are able to get money out of your own estate, or maybe grandparents want to do some gifting. They can contribute, or you can contribute that $15,000 contribution, and then the individual can, it doesn't have to be from their earned income, right? It doesn't mean they have to take their paycheck and contribute it to the ABLE account, but just because they have earned income, it gives them more of the ability to increase that contribution amount. This is, I think, the most updated color chart for states. And I pulled this chart from the ABLE National Resource Center, which I'll show you some resources in a few pages. But all of the states in green are the states that have an ABLE program. The states in gray are the ones that do not. And of course, I don't like to say that Wisconsin doesn't have one, but I will tell you, we are working hard. I've partnered with the ARC of Wisconsin, CUNA Mutual Group. There's a group of what we call financial stakeholders that recently sent a letter to Madison, to the Department of Financial Institutions, letting them know that we are strongly advocating for some type of ABLE program within the state of Wisconsin. Unfortunately, there needs to be legislative approval for that to happen. So it's still in front of the legislature. One thing the Department of Financial Institutions said that they would be willing to do is at least to increase the level of communication, what they call links on their websites for ABLE education. But so far, we have not been successful in getting a Wisconsin State ABLE program. My message to you is that doesn't mean that they're a bad thing because the funds are not held in the state of Wisconsin. Know that the ABLE accounts are still a very valuable planning tool, and there are many other states that have very strong programs. What do I need to consider? So that's the other question. If you look back at that slide, that's 42 state programs. And I like to use the analogy of the cereal aisle. Think of how many choices there are for cereal. More choice does not mean better. I mean, we still go to Cinnamon Toast Crunch, maybe Honey Nut Cheerios, and if I'm feeling flexible, I might let my kids get Fruit Loops. I mean, how many ways do you step out of the box? But there are 42 programs for you to choose from. So what do you need to be thinking about? Well, how can you enroll in that program, right? Is there any way for it to be in person? And I will tell you, most state programs are not allowing in-person enrollment. It's either over the phone or online. So you've got to have a comfort level with that. Each individual state program chooses their own investment provider. So if you have some knowledge and experience of, wow, I'm really looking to invest with BlackRock, or I know a lot about Vanguard, then you're going to be interested in who the investment provider is. Keep in mind what the fees are. Some state programs have monthly fees, just like a typical bank account would. There's also fees for the investment options if you choose to invest within there. You do not have to invest the money in the ABLE account. All of them are FDIC backed, and therefore they have a bank safe account, kind of a fixed account, but you do have that option. Think about distribution options. Will there be the ability to write checks? Can you do an ACH between bank accounts? Is there a debit card? Is there a loadable debit card, meaning where you can control the merchants and the dollar amounts that can be utilized on the debit card? There's many different variables. People always say, Kathleen, which ABLE account did you choose for Emily? Well, I try not to give that information out. I mean, of course, some of it is because people are paying me for my research and my understanding of their needs in the state programs, but it's more so that you understand Emily is 8 and I have different reasons what I'm doing with her ABLE account than maybe you are with your child. And so these are just examples of things you need to be thinking about. From a resource perspective, the Wisconsin Department of Revenue, this is the link that does have some information about ABLE accounts, but my go-to is really the ABLE National Resource Center. I call it one-stop shopping for all things ABLE. They do have a program comparison tool, and they did implement something where it gives 6 or 7 criteria, maybe what you're interested in. For example, a state tax benefit or a debit card. You can check a couple boxes and it will give you an output to show you which state programs could be valuable for you. So just an example of a couple resources for gaining information about the ABLE accounts. I'm going to transition to trusts now. So if you think of questions you might have had regarding ABLE, write those down and I will circle back to it. But now we're going to go to another vehicle for saving, or not so much for saving, but a vehicle that can be protected to allow the ability for your child to have more than just public benefits to live on. I'm not an attorney, and financial advisors are not attorneys unless they legally are attorneys, but majority of financial advisors are not, and therefore I just tell you that I've done this presentation over the past 4 years now. A lot of the times I do it with an attorney. I don't try to play the role of an attorney, but just know that I'm just giving you general information about trusts. I'm not directing you to kind of what trust you should do. But what are special needs trusts? They are a legal arrangement and a fiduciary relationship. It's another vehicle for an individual to have other assets, but still maintain benefits, those very valuable public benefits, because the assets in a trust do not count. One of the biggest differences, I gave the example of grandma dies and $100,000 is inherited. The ABLE account is not the best vehicle for all of that money because you can't put $100,000 into an ABLE account, but a special needs trust, there's an unlimited amount of money that can go into a trust. the basics of a trust. What's different is there has to be a trustee, meaning unlike an ABLE account, when Emily gets older, or really even now, if she had the ability to know she had that money, she's the account owner and she could make a distribution and get to that money. When you have a trust, there's an actual trustee that administers and needs to approve distributions. So the terminology is the trustee is that kind of decision maker, and then the beneficiary being the one with a disability. And supplemental special needs trust is because it's meant to provide supplemental care. It's not that in-kind support and maintenance. It's not supposed to provide what the public benefits are there for. There's two types of special needs trusts, a first party or a self-settled, and then a third party. And really, if you think about this, it's where the money comes from. The first party special needs trust is funded with the beneficiary's assets. So for example, let's say grandma passed away and she didn't have a proper estate plan and she wanted to gave $100,000 to Emily. Well, because she didn't have it directed to her special needs trust, the money went into Emily's name. That's not the ideal situation. It's okay, there's a solution. Emily gets that $100,000, it can still go into a trust, but now it goes into a first party special needs trust versus a third party. And where I said before, the ABLE accounts are similar to a first party special needs trust because they are subject to payback, subject to estate recovery. Therefore, if Emily has $50,000 in her first party special needs trust and she passes away, Medicaid is the first debtor in line to get those assets. It can't pass to her sisters like a third party special needs trust. Here is a nice visual taken from, well, I don't love the visual. It's something that is from WISPAC's website. I think they could improve the visual a little bit, but here an example of Sam being the beneficiary and having money from grandma. He then creates the first party special needs trust so that it doesn't kick him off his benefits. Then Sam wants to buy a computer. Sam has to make a request for distribution. In this example, it's to WISPAC. WISPAC being a pooled special needs trust and not an individual special needs trust. I'll get into that a little bit later. So the request goes in, WISPAC pays Apple or Best Buy. They don't pay Sam, so Sam doesn't get the money. The money goes directly to the vendor for the computer. It's not the worst case scenario if money goes to the beneficiary first at an inheritance situation, but just knowing that the ideal situation is a third party special needs trust, where grandma and any family member knows that Emily of my 3 children has a supplemental special needs trust. So if you have her in your estate plan in any capacity, make sure that you direct her portion of that inheritance to her special needs trust. So therefore, common sources of a third party special needs trust are an inheritance, whether it comes from mom and dad, when my husband and I are both gone and our home is sold and our estate is liquidated and the money goes into Emily's third party special needs trust, or maybe it's our death benefit from our life insurance policy. And the assets used to fund the trust are not and never were owned by Emily, the beneficiary. Okay, it could be any third party that wants to fund that special needs trust and can create that special needs trust. So I've had clients where they didn't hire an attorney to create a supplemental special needs trust. Their parents within their own estate plan created one. You don't need to have multiple ones. There's no limitation on the beneficiary for a third party or a first party special needs trust for that matter. The third party trusts are not subject to payback and allows for the remainder beneficiaries to get that money. So Emily dies, there's money left over in her third party trust, it could go to her sisters. There are pooled trusts, which is different in a sense from the individual special needs trust I've talked about, just because there are nonprofit organizations that run these pooled trusts. In the state of Wisconsin, we're fortunate to have 2. I think we have 3 special needs trusts. The third one is really, really small, but WISPAC and Life Navigators are the 2 largest pooled special needs trusts in Wisconsin. What happens is a separate account is established within these pooled trusts for each beneficiary. For the purposes of investment and management of the funds, the trust pools those. So it's kind of having economies of scale here. And sometimes the pooled trusts are for smaller dollar amounts. So there's different reasons why you might want to use a pooled trust. They can be first or third party trusts. And reasons to have a pooled trust versus an independent don't have a good option for a trustee. And this is really important. Another presentation I'm working on in 2020 is the whole concept of trustee communication. Who you choose as your trustee now and in the future, it's really important. Think about, if you're a parent, all that you know and understand about your child's disability, public benefits, etc. That trustee doesn't necessarily have to understand everything, but they have to really know enough about what that trust is supposed to be utilized for. So I'm not using my other children to be trustees. I'm personally using a corporate trustee because if my husband and I pass away before my children are the age of majority, I don't want their legal guardians to also be responsible for their finances. Now, if both my husband and I are still living in 10 years, when our youngest Emily turns 18, I might revisit that and have a personal friend be a trustee, but right now I've hired a corporate trustee. It's just a big responsibility, and I know how I want things handled. Distributions from special needs trusts can be used for anything the beneficiary needs or wants. Okay, there's not limitations except for the fact that it can't be used for food and shelter, because that's what public benefits are supposed to be used for. Cash cannot be distributed directly from the trust. Again, there needs to be a trustee, and there needs to be a vendor arrangement, and there needs to be information of how those funds are distributed. First party trusts do have strict sole benefit rules, and then distributions treated as income, kind of my example of how to maintain SSI when you're making distributions from a trust and depending on what you're paying for. Now to converse, so the first was distributions from a special needs trust. Now to revisit again, the distributions from ABLE accounts. We said they can have cash. They can go directly to the beneficiary's bank account as long as they're used for qualified disability expenses or not retained more than a month, and can be used for those qualified disability expenses. And again, we kind of talked about those penalties. Planning considerations. I know we're covering quite a bit of information here, but I'm trying to just give concrete examples and give clarity on how these two tools work together and what might be something to consider. So here in this example, it's not a good idea to mix first party with third party funds, right? The first party special needs trusts are subject to Medicaid payback. The third party special needs trusts are not, so you wouldn't want to mix them together. Consideration number two, special needs trusts can do things that ABLE accounts cannot. First and foremost, can receive more money, right? Even if it's the earned income limit, which only gets you to about $27,000 annually into an ABLE account. Special needs trusts do not have those limitations. If the beneficiary is receiving SSI, the special need trust can exceed $100,000. Special needs trusts provide professional management of the account, whether you're using a corporate trust, you're working with a financial advisor if you have an individual trust and the advisor is managing the trust. Some trust programs provide additional non-trust services to the beneficiary. If you don't know about Life Navigators or WISPACT and you see that might be a vehicle you'd want to use, if you go on their websites, for example, Life Navigators has case management. They have quite a few social services that are attached to their pooled trust program that can be beneficial to you. Special needs trusts can receive in-kind distribution. I know working with an attorney, she shared an example of how parents had a farm and they put the farm in the trust. Well, you can't do that with an ABLE account. So just kind of examples of that. Consideration number three, ABLE accounts may be able to do things special needs trusts cannot, depending on the intellectual capabilities of your adult child or child. The thought of them getting cash might be good and it might be bad, okay? So be thinking about that. Do you have an individual who would be able to have management of their finances in any capacity? It can pay for food and shelter without the reduction of SSI. The traditional 529s can roll over, etc. And as I said in the beginning, really one is not meant to replace another, right? The ABLE accounts did not come along to get rid of the value of an estate planning attorney. Special needs trusts are not there to get rid of the value of a financial advisor or individuals being able to utilize ABLE accounts. So just giving you examples of how ABLE and the trust can work together. So for third-party trusts, distributing to an ABLE account minimizes taxation. If you're familiar with trusts, trusts are taxed at the highest income rate. I'm also going to be doing some future communications on the change in inherited IRAs and the required minimum distributions that occurred with the Secure Act. I don't have a lot of information here about that, but there's just kind of a lot to know regarding all aspects of planning when you're utilizing a special needs trust and or an ABLE account. So this last slide is just a nice visual to look at how they differ or how they're alike. Both the special needs trusts and the ABLE accounts are exempt from limits. The difference with the ABLE account, we know, is there is a limit, right? So I guess they're not fully exempt from limits. Yes, they are exempt to an extent for an ABLE account, but unlimited for a special needs trust. Annual contribution limits, direct beneficiary access, subject to Medicaid payback, professional fees to create. Let me highlight that portion of things. You do not need to work with a financial advisor or an attorney to set up an ABLE account. In fact, the National Disability Institute, all of the key stakeholders who were around for the past 15 years for creating these ABLE accounts, their goal was to make them as do-it-yourself as possible. So for example, myself as a financial advisor, I can't get paid through an ABLE account, and that may mean something to you, it may not, but there are certain types of investment vehicles where financial advisors can get compensated through a share class. So with the traditional 529, there's a direct 529 in Wisconsin called the EdVest program. There's another program which is also a 529 in Wisconsin, but it's called Tomorrow Scholar. The difference is the Tomorrow Scholar program is something I, as a financial advisor, help my clients set up, enroll in, implement, understand, invest in, etc. Well, I can get paid from the dollar amounts that they have invested in that Voya Tomorrow Scholar. I don't get paid through the EdVest, so that's really the do-it-yourself option for the traditional 529. All of the ABLE accounts, except for the state of Virginia, which has two options, either do-it-yourself or there is an option through American Funds, state of Virginia, for a financial advisor to receive direct compensation. Therefore, the question is, well, do I have to work with you, Kathleen, to set up an ABLE account? Absolutely not. You don't have to work with anybody. You can go to the ABLE National Resource Center. You can go through the state comparison tool. You can watch their 50 or 60 webinars and do it yourself. Clients choose to hire me if they feel like that's out of their scope of knowledge, out of their scope of time. They're in a time crunch. They got too much money. They have to get out of the bank account. They don't have time to do it. But just know that any of the ABLE accounts are really meant to be a simple way to enroll, to implement, and ultimately to use. And of course, there's no professional fees needed to maintain the ABLE accounts. So in summary, as we wrap up here at 43 minutes, ABLE accounts and special needs trusts, it's important to understand what they both are, how they're utilized, what their benefits, what some of their limitations are, how they are really built to complement one another. And it's important to know when and how to use one or both of them. Of course, as a financial advisor, I'm going to promote my services and the level of knowledge and expertise I have regarding special needs planning in general. I just have taken it upon myself over the past 6 years to really become an ABLE account expert. But as I shared, I'm not making a living off of enrolling people in ABLE account. It's really just an added benefit and value to my clients of utilizing that tool in my toolbox. And so just in general, this was meant to help you understand all of the comprehensive planning tools that are out there and help you, as whoever you are on this call, parents or family members, to be thinking about the importance of planning in general, whether you're doing it in conjunction with an attorney or with an attorney and an advisor or just on your own. It's so important to plan things that we do not know for sure, and that is how public benefits will be maintained over time, and there's the possibility of them being decreased over time. Just be thinking, when as you age, as your child with a disability ages, how are you going to plan for them financially for 2 generations? So Bonnie, I am done with my portion of the presentation. If you want to open it up to questions, that would be great.
Sure. So we do have a couple of questions for you. The first one is, can SSI payments be deposited in an ABLE account, and will this make them taxable?
So what I'm thinking, I get this question a lot. It's the thought that maybe my child lives at home and I'm charging them rent, but they don't utilize all of their SSI and it kicks them over their balance. Yes, the ability to take money out of an individual's bank account to keep them at that $2,000 level, and the funds can, wherever the source of those funds are, it can be SSI, it can be gifts, whatever it is, yes, they can go into the ABLE account. And meaning, are they taxable? So it's the same concept that you're getting those dollars provided to you after taxes, or you've already pay taxes per se on them. The money goes into the ABLE account and it can grow over time as long as the funds are used, distributions are used for qualified disability expenses. It's a tax-free distribution.
Okay, thank you. The next question we have relates to record keeping and record keeping tools. You had mentioned before that there were certain states that had tools to be able to keep pretty good records. Do you have any suggestions as to which states, or do you have a form that you use or that you would recommend to anybody? Because sometimes this isn't the easiest thing to do.
Right. Well, I'm not going to give specific suggestions for state programs. I want to stay away from that. But I know that state programs are trying to be very similar to one another. I can't tell you how many have and what tools they have, but think of it when you go online to your bank account and you can see the vendors where the money was spent. And that's really what you have. You have online access, and you're going to see if the balance was $1,000 and you get your monthly statement. Then in July, you can tell where the money was spent. Now, if it's cash, so maybe you're just taking distributions from the ABLE account and putting it into the bank account to then pay something, kind of like a cash or a check, I would recommend an Excel spreadsheet to keep track of the dollar amounts taken out and then what it's used for. So really just a basic Excel spreadsheet. If you like paper, I think Excel is good, but paper is good too, kind of the date of that distribution and just knowing following the money trail. And it might need to be manual when it's more of money going from the ABLE account into a bank account to then pay something out. So. And
Okay.
really, if the IRS were to audit you, I mean, this is kind of the regulatory organization over the ABLE accounts. You just like anything else, you kind of have to keep your records.
Okay, and then another question we have is related to the ABLE account and someone who works. Mm-hmm. So I would guess from the information that I've received here that you said before that the money didn't necessarily have to be from, quote, the person who's earning the money's account, but it could be up to a certain amount if that person is making some money working?
Yes, yes. So it has to be that, like I gave the example, let's say Emily's working and she earns $10,000 a year, then she has the ability to contribute an additional $10,000 into an ABLE account. It doesn't mean it comes her paycheck goes into her bank account, and exactly that amount that came into her paycheck goes in every pay period into her ABLE account, but it has to equate to what her level of earned income was. So if she only earned $5,000, she wouldn't be able to put the maximum amount, which is $12,060.
Okay, so is there some record that has to be kept of that additional amount, or just the sheer understanding that this person is working and making money?
Well, a W-2, kind of from a tax perspective, would be the record per se. And the interesting thing is these accounts have been around for 4 years now, but what we don't know is, has anybody gotten in trouble yet? Meaning, has somebody's ABLE account been audited, and have they been disqualified from being a qualified disability expense? Over time, I think we're going to see how these play out, just like the example of nobody has reached that $100,000 limit yet, because if you can only put 15,000 or 27, and it's only been 4 years or 3 years or 2 years, we haven't seen that play out. So some of the state programs might have different levels of verification that they require of you to provide, but I tell clients that you just know that if your child is working, if they're getting a W-2, or then you've got to do your own record keeping of where that earned income is from, so that if by chance either maybe the state program asks for verification, or the Social Security Administration, or ultimately the IRS, you're able to present that.
Okay, and that's all the questions that I have for now. If anyone has any other questions and would like Kathleen to address them, if you would type the questions into the question box as quick as possible now, let us know. Kathleen, do you have some closing statements that you have?
Yeah, I just appreciate the opportunity, Bonnie. I know I did this presentation last year at this time for Wisconsin Facets. If you're interested in learning more about my services, you can go to my website. I do have a newsletter if you're interested, and really my newsletter is truly educational to help provide information and I go beyond the financial side of things. I'm very involved with the many different organizations and grassroots families working on housing for people with disabilities, social and recreational support. I give the example that parents want their child to be financially stable, but they also want them to have a good quality of life. And we define that as supported independence, having friends, having employment if possible, being a part of something bigger than themselves. So my services really go beyond just the financial. And yeah, otherwise, just thanks for your time today. Hopefully this was helpful, and make sure to use those resources, especially the ABLE National Resource Center, to find more about ABLE.
Well, and I guess this will dovetail because we did get another question, and the question is more a functional question, and it says, do I set up ABLE accounts in a bank, or are they through a particular state?
Yeah, so no, you can't just go to a bank. You couldn't just run down to BMO Harris and say, hey, I want to set up an ABLE account. You have to do a specific state program's ABLE account, and then that's how you sign up. Like, for example, Nebraska. Nebraska happens to partner with First National Bank of Omaha, or First National Bank of Nebraska, to offer their ABLE account, but not every state does. So no, you can't just go to any bank. You have to utilize one of the 42 state programs.
And I would think that anyone that would be interested in that could go to the resource that you mentioned, the National ABLE Account Resource Center, to get as much information as they can, because there's a wealth of information at that site.
It is, and they still do live webinars. I'm sorry if you have a headache, I was trying to go back to that website. They do live webinars, and then all of their webinars that they've been doing since 2015 are recorded. So there's a webinar on, give me an example of qualified disability expenses. There's webinars for, they call them ABLE advocates, and people who have a disability and have an ABLE account. So they give you an example of how they use it. There's just a lot of really great information. I could never replicate, nor would want to. That's why I just send everybody to the National Resource Center.
And for an individual such as myself who has gone to that website and listened to a number of the webinars, I would think that our listeners today would be very best served, if they're interested in the ABLE accounts, that they go directly to that center and resource and listen to some of those past resources. So we have another question. that people are asking now, will this particular presentation be available online? And just for everybody's information, you will be receiving an electronic copy of our webinar today after the conclusion of the live webinar. It'll take probably about 2 hours to get to you. So everybody will have that, and you will be able to use it to listen to at another time or to share it with others as well. So any other questions? Okay, well, seeing none, Kathleen, I would like to take this opportunity to thank you. Your presentation today was just tremendous, and I'm very pleased that people will have the opportunity to utilize this information in the future because it's extremely informative. So thank you again for your presentation.
Yeah, thank you. Have a great day.
Thank you. And this concludes our webinar for today. We'd like to thank you all for joining us. Please be reminded that Wisconsin Facets has over 80 scheduled trainings and webinars for the year 2020. Please check our website calendar and register for any upcoming trainings that might be of interest to you. And also please watch for the short evaluation that will be coming to you after today's live presentation. Thank you again, Kathleen, and thank you to everybody for your participation today. Bye-bye, everybody.